Joining me as we wait is legendary investor and Janus Henderson portfolio manager, the bond king himself, Bill Groves. Bill, good to see you.
Hey, Trish, you too.
So the White House is saying Jerome Powell is the pick. What do you think of him?
Well, I think he is the pick. I think he brings real experience, real financial experience to the equation as opposed to simply ivory tower, and that's good. You know, he's an ex-private equity investor, and for the past 5 years he's been on the Fed. I think, though, that he's soft on regulation, and that pleases the market. Doesn't please me necessarily, and in addition, I think he lacks the proper appreciation for our credit-based financial system. That's
what do you mean by that?
That's a broad topic, but well, I really don't think as an investor in private equity that he had a sense of credit creation, credit destruction, the shadow banking system, et cetera. I think many of his speeches have been devoid of some of that intellectual discussion, and I think it's important going forward, should we see the potential for another Lehman moment, that we have a Fed chairman that knows what's going on. I'm not so sure at the moment that he does.
Is there someone you would have preferred, Bill?
Well, I would have preferred, you know, perhaps Paul McCulley from PIMCO, who forecasted the the debacle and talked about the Minsky moment, but he's not even on the consideration list. Otherwise, I would have preferred Neil Kashkari, who's a legitimate Fed governor and has displayed, some pretty instructive ideas going forward, but that's not going to happen either.
Would you have been okay with Janet Yellen staying put?
I think so. I'm not perfectly content with her, but I think she's done a decent job. She's a little model-oriented or too model-oriented, and I think you need to be more subjective these days in terms of structural ideas that can't necessarily be modeled like Janet Yellen and others have done at the Fed.
Do you think Jerome Powell will be able to normalize interest rates quickly enough? And do you think he will be able to get us out of, basically the money printing environment that we've been in for so long? I mean, this unwind is going to be difficult, as you many times have warned, Bill.
Yeah, I think so. Powell is a Yellen-like governor and a Yellen-like potential chairman, and I think he's acknowledged and accepted the fact that rates are going to normalize. The key is, of course, going forward, what is that normal rate? And I think, if Fed funds today are at 1.25, in December they might be a little bit higher. I think most on the Fed, and I think Powell as well, believes that the normalized Fed funds rate is 2%, and that suggests to me that bond yields are maybe a little low, but not too low, and that, yes, the real economy can accommodate that. I'm not so sure they can accommodate a much higher rate than that, and we're just going to have to see in terms of the additional appointments, Trish, which come after the Powell announcement in terms of new Fed governors, whether they're hawkish or whether they're dovish.
Well, one of the names that had been floated, of course, was John Taylor, out in your neck of the woods on the West Coast from Stanford. Now, John Taylor has been very vocal about his concern that this Fed has been too accommodative. Do you think that he may get some position there? Because he had been talked about as potentially coming in, at least as some kind of additional advisor.
Yeah, as vice chairman or perhaps as a governor. Yes, I think, Taylor is a little more hawkish. He has his Taylor rule that was adopted in the late 1980s by many on the Fed, and the Taylor rule at the moment suggests that rates should be higher. They suggest what most of us all know by common sense, that interest rates this low, basically is too stimulative for financial assets and may not necessarily benefit the real economy, and certainly not benefit savers, which both you and I have discussed in prior sessions.
So does it start to change?
I'm sorry?
Does it start to change, I wonder, Bill? With Jerome
I think
Powell?
it does. I mean,
Okay.
we're moving higher, but probably not high enough to favor the savings economy.
All right. Well, yeah, the savers are having a tough time these days. Anyway, Bill, it's always good to see you. I appreciate you coming on. It's a very big moment here. New head of the Federal Reserve. Bill Groves, thank you.